Bismillah ar-Rahman ar-Rahim. Welcome back once again. So, very specific, very particular agenda number 7. That's about part C 1 and 2, calculation with pre-populated worksheet. Question about adjusted consolidated statement of financial position. So, major marks of the question related to this part. Start with the requirement reading. Okay. So this is about 16 marks of the question. C1 12 marks, C2 4 marks. Let's read first. Using exhibit 3, refer to exhibit 3, the pre-populated spreadsheet option, and you have also the mindset with the initial reading, the drafted consolidated balance sheet available. So we need to adjust the drafted consolidated statement of financial position. We need to adjust or correct the draft consolidated statement of financial position for the year end 31st March XX. Examiner particularly mentioned that you're working with pre-populated spreadsheet option includes or students should consider any impairment required on reclassification of trailer as held for sale. So whenever you are attempting this calculation part of the question with the exam, with the practice questions, always consider the specific point mentioned by the examiner. So here, impairment of subsidy and reclassification and presenting of the remaining asset of trailer in accordance with IFRS 5. You should show all working on a spreadsheet. Spreadsheet. So that's important, huh? We have to mention all workings. Next point. Using exhibit 3, calculate consolidated, means acquisition accounting, profit on disposal of shares in trailer that would arise 30th June XX. So this part of this 4 marks question, it's not related to pre-populated spreadsheet response option. So let's direct your mind or organize your mind with planning aspect. So first of all, before starting the question, make sure you have made a good plan. Be specific during planning. Identify how much time you have. For 12 marks question, you have 22 minutes. And the rule you have to apply 20-80. 20 for planning, 80 for execution. So here, approx 5 minutes you have for planning the question, including reading the requirement we have read and the details of exhibit 3 we need to read very carefully, plus brainstorming. So marks management number 1. Read the requirement that we have already done. Read the requirement and requirement that's done and the facts with exhibit 3, E3 exhibit 3 very carefully. So let's read the exhibit. Here is the exhibit. Auto company originally acquired 80% ordinary shares of trailer. That's very clear. Measuring NCI using proportionate, very simple. Net asset trailer have been included in line by line basis consolidated balance sheet. That means with this balance sheet, consolidated available balance sheet, line by line basis, all trailer asset and liabilities already included. including goodwill, the goodwill of 32, that's already included. The trailer, maybe some other subsidiary. It's no, that's why here is the goodwill of 32, not exactly the 19. So leave this point, but we have to accept this point line by line basis with the draft consolidated balance sheet. All net asset of the trader have been included. Once the trade of Z had ceased 31st March XX, auto company and wheel company continued negotiation for the sale of investment in trailer company. At this date, trailer company met the criteria to be classified disposal group held for sale. It's also mentioned with the previous exhibit. So trailer classification with the consolidation as held for sale. The carrying amount of the net asset of the remaining parts of the business of trailer, a cash generating unit, 31st March XX were as follows. Remaining part means other than Z division. Because for Z division assets, we have decided that not to classify as held for sale. But the trailer, other divisions, we can classify the asset and liability as disposal group. So here are the assets and liabilities. Property, plant, equipment. Here are the asset and liabilities of trailer other than Z division. Property, plant, equipment, intangibles, including goodwill, inventories, trade receivables, trade and other receivables, cash and cash equivalent, long-term borrowings, trade and other payables, and that is total. The intangibles do not include goodwill on acquisition of trailer, which had a carrying amount of 8 million as at 31st March X6. So whatever the calculated we have calculated before, that's 19. That's the goodwill already part of the consolidated balance sheet, and it's about trailer and other more subsidiaries of auto company. But now the trailer company goodwill at 31st March X6 become 8 million. So 19 million was at the date of acquisition, 8 million at the date of reporting. So in the meanwhile, whatever the reason, that's impairment and so on, leave it. None of the goodwill related to Z, the division Z, as it had ceased to trade. So this goodwill is about trailer, but not the division of Z. Fair value of net asset of trailer and transaction cost for the sale of shares were 55 and 1 million, respectively 31st March X6. Means trailer must be reported as a disposal group in the consolidated balance sheet, and the measurement must be carrying amount of the trailer, all asset and liabilities, versus lower of carrying amount versus or fair value less cost to sell. So this is 51.5 minus 1 million, that is fair value less cost to sell. Further, negotiation on sale between auto company, wheel company delayed the sale of the shares until 31st June X6. Tuck and Forth continue to trade 30th June X6 and earn profit of 1.5 million from 1st April X6 until 30th June X6. So that means trailer at reporting date not yet disposed. So we have to report in our consolidation as disposal group because the criteria I've already met. But see, second requirement, disposal after the year end. So calculate the gain or loss after the year end. So these two paragraphs is about the data related to calculate gain on disposal. On 30th June X6, auto company sold 90% of investment. So that means 72% of 15 million. 90% of investment means um, they have originally invested 80% of the shares. So out of that 90, out of 80%, 90% have sold. That means 72% of 15 million of ordinary shares of trader have sold to wheel company with the receive of 48 million. Remaining investment held by Alto estimated fair value 5.2 per share on 30th June X6. So we will calculate the gain or loss with a very structured way of the gain or loss on disposal. Now back to the planning phase. So we have read the requirement and we have read the facts as well very carefully. So our mind has now become very composed. It's about calculation. It's about consolidated statement of financial position adjustment with the IFRS 5 adjustment, specifically reclassification and impairment as well. So calculation, some errors, some missing figures, we have to incorporate. We have to very much committed about the time management. Here 12 marks, and for the war time we have 17 minutes. What I personally think, if you have a good practice background with the spreadsheet functions, so you will be able easily to complete this task within 17 minutes. I personally suggest you can save your time. So before entering into war zone, brainstorm. Number one, here cash generating unit impairment allocations, reclassification of trailer net assets at disposal group. In all the identified asset must be collectively reported as current asset, collectively or liability reported as current liability. But the figures must be calculated at lower of carrying amount or fair value less cost to sell. Identify the impairment if any, and then allocate with a goodwill and more. Do remember here the proportionate method of goodwill of the trader. So complications here about grossing up. Number two, goodwill proportionate method. Okay, grossing up, that's done. So these two specific points, we have to be very much careful. That's why I must say here, before attack, make a clear plan that what you should do. Furthermore, your working presentation below the pre-populated data, as we discussed with the first video of this series of video. Number two, well labeled means referenced, and be careful about whenever you are correcting the adjustment, what should be the plus, what should be the minus. So this is what all done about brainstorming. Now it's time to attack. Now come on. Okay, this is the point. Close unnecessary windows. And this is a spreadsheet. Start working with the spreadsheet. So where we should start working, we have to reclassify the trailer identified asset or liabilities as disposal group. So here we will mention, we can start the question in this manner, with this manner: disposal group assets as held for sale. But we need to determine the value. That's a point. Same the point with the current liabilities. Same the point with the current liabilities. Disposal group liabilities as held for sale. We need to mention working one. So we can start the solution with this presentation, but we need to determine the values. Yes, values. That's important. Yes, come on. But if we wanted to reclassify, some adjustment need to incorporate here. Some adjustment. For example, the adjustment is about goodwill impairment. So whatever we will work for the impairment, whatever we will identify the impairment, if any. So we have to allocate with the goodwill and other assets impairment. In fact, other assets and liabilities. So this is about goodwill impairment and all these things. That is the point. So these are the adjustments. Huh? First adjustment, second adjustment, third, fourth, and then corrected or revised consolidated balance sheet. So let's start the question working with impairment review. Number 2, working number 2, impairment review. Okay, this is working number 2. I'm sorry. We have to label the working number 2. Okay, let's start. Working number 2. Come on. Impairment review. So how to work out the impairment review? Number 1, we have to identify all assets here. For example, the assets trailer. Carrying amount before impairment, it's very simple. And then impairment loss and carrying amount after impairment. This type of activity you have already done with your regular studies. Just make a list over there. Come on. Number 1, trailer goodwill need to gross up whatever the goodwill calculated above. sorry, whatever the goodwill at the reporting date, not above, because above goodwill, this 19 is about acquisition. But here mention that at reporting date 31st March 6, the goodwill is 8. So 8 divided by 80 into 100. So is equal to 8 divided by 80 into 100. That is 10. And all of you people must have to aware about that. This grossing up means it. We are taking the value of goodwill 10, not 8. So this additional 2, it's not actually recognizing. It's only for the sake of impairment test. Okay. So further assets. What are the further assets? These are the assets. Property, plant, equipment, intangible asset, inventory, trade receivable. These are the values. Okay. Can we copy paste? Yes, Control C, Control V, intangibles, Control C, Control V, inventory, trade and other receivables. We can copy and paste the statements from there as well. Trade receivables and cash equivalent. Smart working. Instead of using cursor like this. And long-term borrowings and trade and payables. Quick. Save the time. Yes, 51.8, 14.6, 7.1, 3.3, 1.6, minus 18.5, minus 2.3. Yes. So this is what about, put the formula quickly, 67.6. That is the carrying amount before impairment. Now the point, fair value less cost to sell. And this is mentioned here, 51.5 minus 1 is equal to 51.5 minus 1, 50.5. So that means there is an impairment loss. Identified impairment loss. This is impairment loss. 17.1. So first of all, allocate the impairment. Do remember the 17.10 impairment loss. First of all, allocate with the goodwill. The goodwill is 10. So minus 10. Minus 10 out of 17, we have allocated 10 with the goodwill. But goodwill is a proportionate method. So allocation of the goodwill, goodwill impairment recognition only affected to the parent, that is CR, and the amount is only 8. It's very simple. Now further, number 3, the point is that the remaining impairment must be allocated to the other assets. So working 3, impairment allocation. impairment loss after goodwill. That is 17.1 minus 10. Now need to allocate. Very important point. What are the other assets? Other assets are property, plant, equipment, intangibles. But inventory and trade receivables, trade and other receivables also exist. There is no information within the question that either inventory and trade and other receivables having their same realizable value or not. Any impairment about inventory, any impairment of trade and receivables, no indications. So we will assume that inventory and trade receivable already with their realizable amount. Already with the realizable amount. Because if no information available about inventory and receivables, we need to take this assumption. This will be more rational. So allocate between PPE and other intangibles. Property, plant, equipment, other intangible assets. Other intangible assets. So what are the values? The values are 51.8 and 14.6. 51.8 plus 14.6. This is the total value. So is equal to 7.1 divided by 66.4 and multiply by 51.8 is equal to 7.1 divided by 66.4 multiply by 14.6. So that's the allocation. Yes. PPE and other intangible assets. That's the point. So now you need to incorporate the values in this manner. Is equal to minus 5.4 is equal to minus 1.56. Same value. Sorry, no impairment losses here. That is the point. So these are the values. Now very important point. That is after impairment. The values after impairment. Okay. So students, a very important point here. These are the values of trailer after impairment. But we have to identify what is the total value of the assets. These are the value of assets. These are the value of assets. and these are the values of liabilities. So make a sum is equal to sum. These are the assets. 71.3 we will report as disposal group asset. These are the values as a disposal group assets. I hope it's very clear to you. And as disposal group liabilities. As disposal group liabilities. After impairment value. So adjust the reclassification and also make adjustment with the retained earning. What I said, also make adjustment with the retained earning. Sir, retained earnings? How? Yes, that's important. Yes. Impairment losses adjustments impairment losses adjustment. That's very much important, class. Very much important. Number one, goodwill. Debit only retained earning. Credit goodwill. Credit goodwill. And that is the value of 10 minus 2 or only 8. Only 8. Because this is a proportionate method. Although here mentioned the 10 impairment loss, but 10 it's only the mathematical figure. It's only about grossing up. Proportionate method, the goodwill impairment not affected to the NCI. But the other assets, PPE and other intangible of subsidy, we make the adjustment like this. Debit retained earning with 80%. Debit NCI 20%. Credit PPE. Credit other intangible asset. Yes, what are the values? 5.54, 1.56. Yes, 80% is equal to sum into 80% is equal to sum into 20%. That's the allocations. 5.68, 1.42. So that is what the adjustments about. That's we have done it. Now, what are the columns for adjustment? I have splitted the column adjustment, goodwill and other assets and liabilities, because goodwill only affect to the retained earning. Other assets only affect to the other assets affected to the retained earning, parent share and NCI as well. Now the final point. First, goodwill impairments, other assets impairments, and reclassification. and here revised consolidated financial position. Now come on, you must be very much conscious about the plus minus sign. Number one, goodwill impairment. So number one, goodwill should be adjusted with this figure. You can connect the goodwill adjustment with here, not the 10. Be careful. Here only 8. So goodwill credited with the asset, the value should be minus. Should be minus. And here the retained earning. Also the adjustment with retained earning. Retained earning debit, that should be minus. That's the first point. Other assets. Other assets. What about the other assets? Property, plant, equipment is equal to take out the value from the tabular minus 5.54, already in minus 5.54. Other intangibles, minus 1.56. So asset credited should be minus, and both these adjustment affect to the CRE and NCI as well. Retained earning affect to the retained earning. So retained earning should be reduced minus retained earning 5.68. NCI should be minus. Be careful what should be the minus, what should be the plus. So all other assets closed. Goodwill closed with adjustment. Now reclassification. Once we are reclassifying, listen carefully, reclassifying. So carrying amount after impairment, these assets 71.3. So make an entry. What should be the entry of the reclassification? All these assets one by one. PPE credit, intangible assets credit, inventory credit, trade and receivables credit, cash and cash equivalent credit, and debit with the one account, disposal group asset 71.3. Same for liability. Long-term borrowing 18.5 debit, trade payable debit, and credit only one account with the current liability, disposal group liability. So this entry should also be reflected here. Number one, property, plant, equipment minus 46.6. Goodwill already become adjusted. $13.04 minus reduced inventory, trade receivables, and cash. Yes, quickly. Minus 7.1. Yes. Same case with the liabilities. Reduce long-term borrowings. Trade and other payables. Yes, the figure already in the uh, table, already in the minus. Table already in the minus. So don't need to mention the minus sign. So all these asset it reduces, and one asset by name, disposal group asset 71.3. Same for the liabilities. $20.8 should be the liability. So that is all done. That is all done. That is all done. So it's about revised consolidated statement of financial position. Revised consolidated statement of financial position. Revised. Number one, the very important point. You just make a total over there. After this making a sum, I will tell you a very amazing point. Okay, Control C, Control V. Total assets, Control C, Control V. Total asset, that's 306.7 is equal to sum, sorry, is equal to make a sum 370. Okay. What about the equity and liability? Control C, Control V, Control V, here Control V, non-current liability, Control V, Control V, Control V, Control V, Control V, Control V. Yes, come on. Number one, total equity. Okay. NCI and plus this 268. No deferred tax liability adjustment. No deferred tax liability adjustment. Sorry, long term. By mistake, I mentioned the things on the long. Sorry, it's long term liability here. Yes. 35. 74.2. So here total liability 74.2 plus 35. 109.2. 109.2 plus 268. 378. So here balance, 378 and 378. Candidates, now the balance is tie, but I have a question to you. How much time you and me have taken for this revised consolidated balance sheet? It's about 2 or 3 minutes. But do you know that this column with the marking scheme has no marks, 0 marks for the revised consolidated balance sheet. So if you have done these working with the right allocations, you will be able to get 100% marks. There is no requirement with the marking schemes. There are no allocated marks to revise consolidated balance sheet, revise consolidated cash flow column, or revise consolidated income statement column. No marks. If examiner particularly mention that make a column of the revised consolidated statement of financial position, then you need to do this. What I personally think, examiner will never ask about this. Will never ask about this. So that is all about part C1. Part C1. And a very small requirement, that is about part C2. Quick. Part C2. Gain or loss on disposal of trailer. Shares. Here about control lost. Control loss. And the date, it's not year end. It's about 30th June XX. Very good. 30th June XX. Very simple. Do remember, this is consolidated profit and loss. It's not about individual books. Number 1, fair value of consideration received. That is proceed. That is proceed. Very simple. Here proceed of the 48 million. 48. Fair value of remaining investment. Remaining investment. That's 5.2 per share. So how much the remaining investment? 15 million. If you have sold 90% of the investment, originally you have purchased 80% of the share, no? So here remaining 8%. So 15 million shares into 8% and each value 5.2. 15 million total shares. Previously you purchased 80%. Out of 80% you have sold 72%. So out of 15 million, remaining 8%. So 15 into 8% into 5.2. So that's the point. 6.24. 6.24. So here the total 54.24. Now carrying amount of net asset of trailer at disposal. At disposal. At disposal. So number one, disposal is the date that we can count from reporting date plus some more months. That means at the reporting date, the net assets value we have calculated above. Yes, that is 50.5. Fair value less cost to sell, that was 50.5. Trailer net asset at 31st March XX, 50.5. But 31st March XX is not the disposal date. So 50.5 as above plus here mention 30th June X6, sorry, Tuck and Foss continued to trade 30th June X6 and earned a profit of 1.45 million from 1st April X6, means after the year end, start from the after the year end until 30th June, till disposal. So 50.5 plus 1.5 profit. Sir, do we need to show this working? Not necessarily. Just mention 15.5. If you do that, that's good. Less NCI at proportionate, NCI at disposal, no goodwill. So it's very simple. 52, it's net asset, fair value of net asset of the subsidiary, into 20% at the disposal date is equal to 52 into 20%. That should be minus. So parent position after disposal 54.24 and whatever they have lost, that is 40.6. So that is gain on disposal. Gain on disposal. And that is the value 54.24 minus 41.6. And that's all done about the calculation. You have to mention the working labeled with the working. Working 3 and here working 4. So that's all about part C. That's all about the part C. Don't worry, you will get all the solutions, including suggested answer, PDF, suggested answer, PowerPoint slides, plus this spreadsheet working as well on Excel sheet. So should we enter the working name with this columns? Yes, you can do that. Working 1, working 2, working 3, that's good, but not necessarily. So you can mention for more clarity. So that is all done. So with respect to the calculation part of the C, we have done it. That's all over. Now, the last video session based on the agenda, considering the examiner report analysis and further more things, we will cover with the next video. Thank you very much. Take care a lot. Assalamu alaikum.